The future requires banking. It will not require banks in its current form. A significant amount of disruptive innovation is currently taking place in the financial services space, and banks will not escape the transformation that is required to survive. There are 7 mega trends starting to play out that we will briefly cover in this section. These trends are already starting to have a significant impact on banking as we know it, and the disruption will only accelerate. Financial services products will change from traditional opportunistic products to a paradigm where product development is driven by a data strategy, where behavioral data is analyzed and monetized. A major trend that is playing out currently is that fiat currencies are approaching the end of a cycle, whereas new digital currencies are at the start of a new cycle. Fiat currencies are facing a slow demise due to excessive money printing, significant sovereign debt, and bond dynamics where there are almost zero return and perpetual rollovers of debt. Digital currencies have seen significant interest and investment. These currencies have some way to go before they offer an alternative transaction mechanism. However, the disruptive ability is significant. For example, if governments issue digital currency wallets, the need for a bank account may disappear. And, should a distributed digital currency system be widely adopted by society, the need for central banks and commercial bank accounts may disappear. There are also many risks with digital currencies, the most important being that the existing digital currencies are not currently being underwritten by anyone. Banks have traditionally dominated payment systems infrastructure and managed to keep competition out to a large extent. This is changing rapidly, as non-banks are allowed to enter the payment systems via initiatives such as open banking, using API interfaces. There is also significant innovation taking place by various fintech startups, as well as big tech, who provides innovative customer payment solutions. All these new entrants are now competing with banks for a share of lucrative payment revenue streams. Banks have traditionally developed their own core banking applications and interfaces with many fragmented support systems. Customers are increasingly migrating to platforms that interact across societies and industries. Therefore, banks are finding that they need to develop their own customer-centric platforms, and also integrate with third-party platforms that are being established. The major challenge facing banks is that they need to simultaneously adopt a platform-driven strategy, whilst dealing with the cost of their expensive legacy systems and infrastructure. Most banks remained focused on product silos, and incentivize their employees along product-focused structures. Digital finance business models require a customer-centric approach to succeed. Banks also continue to maintain hierarchical organizational structures. Digital finance requires the adoption of integrated and collaborative ecosystems. Conway's law states that organizations design systems that mirror their own communication structure. Banks will therefore find it very difficult to succeed with digital transformation if they retain a hierarchical and siloed organizational structure. As an example, you cannot build a successful quantum-entangled ecosystem with analog technology and management structures. There is a key difference between the approach taken by financial services institutions and technology companies. Financial services institutions offer transactional and other services, for which they charge a fee. As part of this process, they collect a large amount of valuable data. Financial services institutions are largely trusted by their customers as custodians of their data. Technology companies, on the other hand, provide services for free, and collect substantial amounts of valuable customer behavioral data. In this model, customers are in fact becoming the product, without customers fully comprehending this dynamic. For technology companies to make money from their activities, they have to monetize the data, often resulting in privacy and ethical use of data conflicts. As technology companies start entering the payments value stream, and financial services companies become increasingly more platform and data-driven, the areas of distinction will become blurred, and competition will become fiercer. Those players who are best at providing platforms that are effective, efficient and provide customers with comfort over ethical use of data, are the most likely to succeed. New Paradigm Finance offers a range of risk management advisory services. We thank you for your time to watch this short video, and invite you to visit our website and social media pages. Please contact us for more information on risk management training and advisory services.